Welcome back to Max Trades Crypto. Today we're going to be going over 3 different scenarios and doing some education as well. So starting on our main scenario on the chart, we are looking at this W, X and Y. Inside this WXY, we are still looking for a move towards the downside in that Y wave, and this would target around those high $60,000 areas. So what is a WXY? So let's do some education on this first. So a WXY is a standard corrective structure, a W, an X, and a wave Y. Inside a W, we have an A B, and a wave C. Very standard. Inside the Y, we have another A B, and wave C. Inside the X, we are looking for any corrective structure. So if we compare this compared to an ABC correction, an ABC correction is another 3-wave corrective structure, except inside the wave A we have 5 waves, inside the wave B 3 waves, and inside the wave C another 5-wave move. So this is how it varies. In a WXY, we have 3 wavers all around. So if we look at our structure at the moment, we can see that we have a W going down in an A B, and wave C. Then an X going up, which we have labeled now. Remember, X can be any corrective structure. We have labeled it a W, an X, and a wave Y. And then we are looking for now another wave Y to the downside in an A B, and a wave C. This is what our standard target looks like for this wave Y. Now, where would this wave Y target? Oftentimes it targets from the 1-to-1 of the wave W. So the length of wave W, so we take it from the top of wave W to the bottom, to possibly the length of the wave X, which should sit at around $95,000. I'll get into that now. But we should be seeing a possible target for the wave Y at $64,051. Let's actually change this to orange so you can see $64,051 would be the target in this scenario here. Now, if we go into shorter term time frames, we can see we made very, very ugly price action, right? This is not price action we actually want to look at for a move towards the upside, like a double 1-2 or anything along those lines. So here we can see we have a wave A in a possible diagonal. The problem with this now is that we have touched the 886, right? Inside any corrective move or any move towards the upside, we are never looking to touch this 886 over here. We can see we touched the 886 and came very, very close to making another low, but didn't, right? The touch of an 886 is very rare for this to be a move towards the upside that is not corrective. So it's just a rule in Elliott Wave Theory that as the 886 is touched, we are looking for this low to be taken again. So that is what we are currently still looking for, instead of that double 1-2 towards the upside. The second reason why this is terrible price action is we did not even, from the wave A or top of wave A, we did not even hit the 0.382 for a wave 2 correction, right? So if we are looking for a 1, 2, 3, 4, 5 towards the upside, something along the lines of this, we are looking for a deeper, more in this target range of the 0.5 to 0.78, that move down deeper before blasting off in the wave 3, 4, and the wave 5. So that is what we were looking for, but price made this terrible, terrible structure here where we have a very, very sideways range and then a move towards the upside that is almost the size of wave A now. Now, what this is more likely to be is an ABC, where we have a wave A up in a leading diagonal, a wave B an A, B, C, D, and E in a triangle, and then a wave C to finish off this move, right? That would be an ABC structure towards the upside, finishing this ABC, finishing this Y, and then finishing this X. X is not supposed to touch the 0.7. Just another rule. A 0.7 touch makes it very, very less likely for this scenario to then occur. So that is what we are currently looking at for our first scenario. Then for the second scenario on the chart, we have this one over here. This one is also possibly likely to play out, but I have not labeled it as our main scenario just because the other scenario for me looks more likely. Now, this is a move where we have a leading diagonal to the downside in an A, a B, a C, followed by 2, 3, 4, 5. And now we are looking for a three-wave structure to the upside, followed by another 1, 2, 3, 4, 5 towards the downside. Now, what we're actually looking at here for some education is a leading diagonal. Now, a leading diagonal towards the downside is where we have a wave 1 down, wave 2 up, 3 down, 4 up, and 5 down there. Inside these structures, all structures have to be simple zigzag structures, which means an A, B, C, 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 as you can tell by that. And then followed by that, we have an ABC to the upside and then another 5-wave structure down. So that is what we're currently looking at. You can see here we have a leading diagonal here where we have a big wave 1, A, B, C, followed by an A, B, C, and 2, then an A, B, C, and 3, A, B, C, and 4, and A, B, C in wave 5. This means we are now looking at the possibility of a correction. In this correction, we have again the ABC labeled here, A, B, C, except this ABC is very, very short in time compared to this leading diagonal. So what I've labeled here, instead of just an ABC, I've labeled a WXY, which could indeed extend this range to at least make 50% in time of this range over here in the leading diagonal. So that would just be a more likely scenario to play out instead of just a straight ABC to here and then another crash in the 5-wave down, right? This could actually be the main scenario as well at the moment, because both scenario 1 and 2 are looking for a move towards the downside, whether it is now in this scenario here, whether it is straight down in the Y, or whether it is in the scenario here just in the X. It is still a possibility looking for this move down, right? This, just what I want to add, this structure over here, I know I've spoke about it on the other scenario, but price does not often just absolutely rocket off and with no corrective structure to the downside, right? Often we look for something along the lines of a 1, 2, 3, 4, 5, right? This is not that. You can see here that we did not come down at all any time into any range here before blasting off. We had a very weird long weekend over the Easter holiday, and then all of a sudden just blasted off in possibly a 1, 2, 3, now making the 4, finishing the 5, possibly finishing the 5 at around that $95,000, $96,000 level. And now we are looking for another structure towards the downside, just to end off the structure a lot better than looking like this, just an absolute blast straight and another blast. It's not a very common pattern. Now, if we go to scenario 3, then we can see here that scenario 3 is the most bullish scenario, but in my opinion, the least likely, right? Here we have the finishing of a WXY towards the downside, and now we are looking for those 5-wave move, the 5-wave move up, right? Here we have a 1, 2, 3, 4, 5. That is what we're currently looking for on this scenario. Very unlikely, as I've said, because this structure over here is not deep enough to be considered a wave 2, right? But if we were to move the wave 2 there, sure, we can then make this a possible 5 wave structure. The wave 3 does definitely have the most volume compared to wave 1, so it is in line with the Elliott Wave rules, but still not a very nice structure to have. If we look for the target of the wave 3 in the structure and we then bring it to the bottom of wave 2, we're looking for the 1.618. 1.618 sits, wow, at $103,300, right? That is still, it's a good move away. It's another on top of this move that we've already had, which is, I mean, this move here is already 12%. The whole move up is 26%. The move from here to get there, another 10, is a 36% just blast off common with no wave 2 correction. No, it's not common. In the years of Elliott Wave that I've done, it is not a common structure. It has indeed happened. I have seen scenarios where this does happen, and this is why this scenario is here. It is just very, very unlikely. Then, if we just take a look, why I say this is unlikely as well, if we take a look at the RSI currently, right? The RSI currently is sitting very, very overbought. We have, I mean, we've been overbought for the last 21 April. It's now 23rd for the last 3 days, right? Last 3 days we've been oversold. If we look at the daily time frame, we have also been oversold on the daily. If we, let's actually look at the weekly. I have no clue what this is. Still coming up on the weekly, possible something along the lines of this here that we saw in July 2024. But the weekly RSI is less likely to have a big impact on daily price action. So if we were to go back to the daily, we can see here that when the daily time frame is indeed overbought in the past, it does indeed come down. We can see it many a time, like over here we had oversold and we came down with a move down. Over here again oversold, we came down with a move down. Even if it is not a massive correction to the downside, not something like this or anything along the lines of that, we're just looking for some form of wave 2 that we can look at to look at a possible 5 wave structure to the upside. Then, enough of the RSI, we can now talk about we turn off all scenarios here. We can now talk about the trend lines. Now, on the daily time frame, we did indeed crash through the standard trend line, but when we came to retest it, we found it again, used it as support, and then blasted off from that trend line once more, right? We can see here that using this trend line as a triangle pattern here, obviously let that move up indeed expand. Now, I've drawn another trend line over here from, if you look at the daily, or I think it's the 4 hourly, it starts here, touches through this area on the 7th of September 2024, and then touches exactly this perfect pivot point of where we did blast off from again. So what does this mean? This possibly means that we could come down again, maybe retest this trend line and again up. If we break through this trend line again, this trend line will then be faulty as we've broken through it twice, and we are likely to come and retest this one here at around $78, $75, $77,000 there, right? If that one breaks, so if this one breaks and that one breaks, the likelihood we are going a lot lower, possibly to the 64,000 on one of our other targets, is indeed higher, right? Please keep an eye on these trend lines. Then we are looking at short-term daily fair value gaps, right? A fair value gap, let me do some education again, is when we have 3 candles. Let's actually draw it nicely with some rectangles here. 3 candles where we have price action that looks something like this, and like this again. Because price has not filled this gap, so from the first candle to the third candle, we can create a gap, right? A gap that is not yet filled out. Oftentimes what happens in future price action is we then come back down to this gap. We might go up and up and up and up, come back, touch it as support, and turn around for that move up again, right? So that is what a fair value gap is, and we are looking for those on the daily time frame. So we can see there are a few below us, but what was very, very interesting is we actually just touched this fair value gap here, used it as support before we moved towards the upside. We are also finding a few fair value gaps here that we are creating. This candle over here, this daily candle, is definitely at some point going to get filled out. This is a massive fair value gap to have in one single candle, right? On the daily time frame, this is definitely going to be filled out in the future. Now, lastly, for our trade possibilities starting on the 4-hourly time frame, looking at our first scenario here, we are still looking for a move down, right? This wave ABC is possibly targeting $95,913, right? I personally am going to short from this level. This would be going against the market, but at the moment on an Elliott Wave standpoint, this is a very, very ugly structure, and we are likely to take the low here. This cannot go up forever, and what goes up must come down on these type of moves. So I would be shorting from this $95,913 level, targeting either that $64,000 level as we spoke about with the wave Y, or targeting the wave possible W, X, and Y, depending on structure towards the downside. If we get an A, B, C like this, I will be closing on the X, or if we get a move that is quite sharp, followed by a big move up and a big move down, then I will be looking to close at around that $64,000 level. I mean, if we do follow the scenario and go for the $64,000 level, that is a 33% drop. That is a big move, a very, very big move, especially if you are trading with leverage. So do be careful when you trade, but that is the trade possibility that I am indeed going to take. Guys, thank you so much for watching the video. Do subscribe to the YouTube channel down below. I'm going to be doing a lot more videos now that exams are finally finished, but it's been Max Trades Crypto. Cheers, guys.